Welcome to Financial Buzz Market Weekly. I'm R.K. Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. It was a choppy week in the market, with the major indexes staying at or close to their highs in the beginning of the week and then succumbing to some profit taking later on. Overall, the mood was optimistic as opinions seemed to solidify that the Federal Reserve will keep its bond purchasing program continuing in the next year. In fact, comments coming from Fed board members are suggesting they would like to see unemployment rates lowered to 6% or even 5.5% before increasing interest rates. On Wednesday, the Conference Board released its leading indicators for September, and it was up 0.7% for a second straight month. Jobless claims decreased slightly to 336,000 from 340,000 last week, but the important thing is that all of the computer problems in California seem to be taken care of, making this the first reading since last September that can be trusted. On Thursday, third quarter GDP was released, showing a gain of 2.8%, the quickest pace since the third quarter of 2012. However, the underlying numbers were weak. Inventory growth contributed to 0.83% of the gain, while consumer and business spending growth slowed sharply. On Friday, non-farm payrolls were released and the news was good. 204,000 new jobs were created in October, much better than analysts' expectations of 120,000. Unemployment rose to 7.3%, however. Now let's take a look at some stocks. On Thursday, Twitter went public at the NYSE amid intense anticipation. Priced at $26 a share, it opened at $45.10, briefly touched 50 and closed back around 45 for a single-day gain of 72.7%. Due to the massive run-up, analysts were expressing caution, saying you need to be willing to hold long-term if you buy now and hope to make significant returns. Vitamin Shoppe released their third quarter financials, and their year-over-year numbers beat analyst projections. Year-over-year, net sales increased 14% and gross profit increased 12.8%. The company also opened 10 new stores during the quarter, bringing their total store count to 640. Blackberry fell to a new low this week with news of Fairfax, Blackberry's largest shareholder, not taking the company private, but instead deciding to invest $1 billion into the company through debentures. Along with Fairfax's decision, Blackberry's CEO will also resign. Anoren hit a new high this week when they announced that the company has entered into a definitive agreement to be acquired by an affiliate of the Veritas Capital Fund. After the announcement, numerous law firms initiated investigations of the merger, claiming the merger is not in the best interest of shareholders. And finally, Petroleum, Lin Energy, and Lin Co. updated the public this week about an amendment added onto the existing merger agreement between the three companies. The amendment increased the exchange ratio that each share of Berry stock would receive in the merger. Once the merger is finalized, the new entity will be one of the largest independent oil and natural gas companies in North America. This is Financial Buzz Market Weekly. I'm R.K. Walker, and I'll see you again next week.